The big news hitting the crypto ecosystem today is monumental. The Office of the Comptroller of the Currency, OCC, has officially published Ripple's bank charter application for a national trust bank in the United States. This publicly available filing outlines Ripple's strategic intent to operate regulated financial services, custody of its stablecoin, Ripple Dollar, tokenized finance infrastructure, and direct access to the Federal Reserve. That puts XRP on a path toward becoming more than just a token. It puts it on a path to becoming part of U.S. banking infrastructure. AS XRP recovers nearly 5% and trades around $2.98. Bitcoin is hovering near $114,000 and Ethereum around $3,500. Altcoins like XLM and HBR are rallying too, with significant volume from institutional corridors returning to the market. Last night, XRP volume surged to over $33 million in a single minute, signaling renewed market interest and positioning. Ripple's OCC application reveals a bold vision to become a business-to-business limited-purpose trust bank, holding trust assets, not public deposits or consumer loans. This structure positions Ripple as a regulated custody provider for Ripple Dollar, while preparing them to offer Fed Master account access, enabling them to settle tokenized assets and payments natively. Though XRP itself isn't mentioned in the application, its use is fundamental to Ripple's broader infrastructure model. Every transaction from Ripple Dollar will rely on XRP as a bridge asset. This structure intentionally avoids retail banking. Ripple is not seeking deposit insurance or retail lending rights, but it does open the door for institutional clients and tokenized finance. By separating XRP from the bank regulatory model, Ripple ensures a clean separation between its stablecoin operations and token utility, maintaining a compliance-first posture for enterprise adoption. Meanwhile, major Bitcoin buyers like MicroStrategy and BlackRock continue to accumulate. The recent $53 million purchase of BTC by Metaplanet echoes the move of institutional capital into digital assets. XRP's sudden surge in volume, paired with that Bitcoin demand, suggests capital is re-entering risk markets with conviction. Another major storyline: Grayscale's legal challenge with the SEC. Their XRP basket ETF, once approved, was abruptly suspended. Grayscale now argues in court that the ETF should automatically list after 240 business days under Section 19B. If the court sides with Grayscale, that ETF launches, granting institutional access to XRP via regulated channels. Massive inflows could follow. Ripple also ranks as the 23rd most valuable private company globally, with an estimated $15 billion valuation, just behind SpaceX and ahead of other major tech firms. That scale in private markets hints at growing confidence in Ripple's strategy and infrastructure roadmap. From a macro standpoint, the rollout of ISO 20022-powered Fedwire makes institutions more blockchain-ready. With Ripple seeking OCC bank status and Fed Master account access, the protocol-level infrastructure, XRP Ledger, is combining with regulated utility Ripple Bank. Add in tokenization ambitions, and Ripple is building a stack that aims to underpin real-world asset settlements. For short-term price action, XRP sustaining above the $3 support zone, while volume climbs greater than $30 million a minute, indicates renewed momentum. But longer term, this is about staking claim to the role of the U.S. banking layer for tokenized value. If you're new here, subscribe to catch real-time coverage of Ripple Swell 2025, regulatory updates, ETF filings, and tokenization announcements. If this video added value, hit the like button and leave your thoughts with the hashtag XRPBank. Is XRP becoming infrastructure? That's the question, and the next few regulatory moves will define the answer.